Hey guys, welcome back. So today in this video, we are comparing these two strategies of the two different concept, but they look like same, they work like same, but the confirmation which you are getting from the smart money concept, but the confirmation that what you are getting in the order flow, what kind of a difference we have and what kind of an results we are getting and which is the high probability setups to trade with these things and what kind of an high probability information that we are getting from the setup, which one is better to trade, what the SMC trader are making these mistakes, either really need to consider the order flow in the trading journey. We'll discuss all this concept, but at the end I kept one twist. So watch this complete video and let's begin. Hey guys, my name is Sidhu aka Hanker Trading, welcomes you in the new video. And today's topic was very interesting. Today I'm comparing the order flow imbalance versus the smart money imbalance, or you can say the smart money fair value gap. So first of all, let me tell you that what exactly the fair value gap or imbalance in a smart money concept. So here, if you try to look into the right side chart, I am using the normal candlestick pattern of the 30-minute candle, and I will try to open this epic pen. Just give me a sec. Right. Okay, so I hope you can see the candle wicks. Either is it visible or nothing. Okay, let me give me a sec. I will edit those wicks, which will candle border and wick will increase this. Right. I hope right now you can see the wick of this candle. So first upon, let we will try to understand what is the imbalance in terms of the smart money concept. So whenever we find the three candles in a upside or a downside, whenever the first candle low, right, is not tested by the third candle high. So I hope you can see a small gap over here, right? This is called the imbalance in a smart money concept. And if you are looking at something more theoretically or more explanation, then you just simply search about the imbalance about the smart money concept in YouTube. You'll get plenty of videos. And there is also one imbalance, and here is also one imbalance. This is the first candle, and we have a second candle, and we have a third candle. So if you see, this first candle high is here and the third candle low is here. Again, these three candles between we have some kind of a gap. So this is called the imbalance, or some people also call this is a fair value gap. Okay, so first upon, they do consider this entire value area as a supply and demand for them, but they I have seen a lot of video, but they haven't given a proper reason that why exactly they are considering this is the proper or what do you call that, the supply and demand zone. See, what I have started in a trading, that questioning the proper entries or questioning your concept. Ask why, what, when these question every time until you get the entire root of these solutions. So suppose if you are getting a proper the imbalance we are forming here and imbalance is forming here. So what kind of an confirmation you have that the market will going to test this zone and it will going to give a bounce? So there could be the possibility of recurring this entire trend might go continue downside and your stop loss can be taken out, right? Like this. So what kind of a confirmation these imbalance or fair value gap you people have to trade with these, and either it is a really proper way to trade the smart money concept. I don't believe think so, because I'm sharing my experience. I might be the wrong, but the result is in front of you. So when it comes to the imbalance concept in the order flow, how do we identify the imbalance? So I hope you can see these, the yellow color boxes. These indicates the imbalance. So what does that mean? So when these order are executing on the exchange, so we compare the exchange, this order execution as the diagonally, because obviously we will see the difference between bid versus ask. That's what in a footprint we compare these value as a diagonally. So whenever you are getting these orange color or yellow color boxes, this indicate कि somewhat there are such a liquidity are available here, which is three times or 4 times more than the opposite side of the liquidity. So when you try to find uh, this example over, we got around these 11 buy volume and we have a 2 as the sell volume. And if you try to compare here, the buying volume is more than the selling volume. This is what occurs the imbalance. It's not only occurs at the buy side, it will occur at the sell side also. So if you try to take this example, and if you try to find the imbalance at the same price which we got here at the normal using the price action, this imbalance, are we having any kind of an imbalance over here? No, not a single price has been done imbalance here. We haven't got a single imbalance on the footprint. Then obviously for those people who are using the normal candlestick pattern to identify these imbalancing or a fair value gap, the market will going to sustain these prices and it will going to give us a result. Not every time. Not every time these market will going to give a proper respect. See, there is only one thing I just wanted to make you clear, that trade what you see, not what you think. Just because we don't have a proper imbalance we are forming here, this is not a proper setup to trade. Again, try to find here at this price the first candle high and this third candle low. We got the imbalance on this normal price action. If you try to find the same fetching level, so we got some kind of an imbalance we are available here, right? So because of these imbalance have been available at this level, so that's what we can get, the market is trying to hold from this level, right? Not only one time, second time the market is giving a respect. So I believe that try to take a such a entry directly, your stop loss should not be hit, at least the price should respect those level. So for a beginner, try to find those kind of an proper high probability setups to work with this, right? So this is one of the major cause that why these footprints are giving you the one of the high confirmation trade, not just by considering the normal footprint. We'll take one more example I have just seen here. Okay, this particular example. So on the first candle low and the third candle high are not meeting or they are not testing, so we got some kind of a gap over here. So this is the proper imbalance on the normal the candlestick pattern. And if you see, this is the first candle low and this is the third candle high. Between these gap, this is between these fair value, or you can consider the imbalance, we are getting some kind of an imbalance we are forming. This is the confirmation, this is the one of the information which are completely missing from the all the other concept. See, order flow is the one such a thing you can combine with any strategies in the world. The only thing is you just need to learn how this order flow footprint works. So this is one of the strategy comparison between these this smart money concept, imbalance concept about the order flow, and how you can improve your imbalance or the fair value gap. This concept, how you can improve your accuracy by just combining these order flow concept. There is also one more concept we use in our trading style. We call it as the liquidity levels, but in terms of the smart money concept, we call it as finding the order block. Finding the order block in terms of smart money concept and finding the order block in terms of order flow is completely different. We find one of the highly respected order block just by using these footprint and liquidity concepts. So obviously we don't trust these wicks. Just based on this week, we don't trust this somewhat we have a liquidity here. We trust these numbers, right? Hope you got a complete information that what exactly the difference we have from the imbalance in the footprint and imbalance in the SMC, which one have the more confirmation data and which one have the less confirmation data, as well as if you are someone who is trading on the imbalance trading strategy, that how you can combine this footprint into your strategy and you can find this high probability, the fair value gap or the imbalance, you can say. So that's all about today's video. See you in the next video. Till then, have a happy trading. Thank you.